Alright, so let's try this again. ES, crude, and whatever. But first start with the ES. You had a rally, you had a pullback. This pullback, very important. Why? First of all, I'm going to explain this with point and figure because that's what's giving the clearer picture. Okay. Now, understand this base projects to 4,400 and the stepping stone count projects to 4,375. Alright, so that was the change of behavior. This is the ES on a 40 brick size, 40 box size. So after this change of behavior, you can buy the pullback and load the boat or whatever you want to do. All right. So remember this: when you have big numbers that are breaking levels, that is the change of behavior. It has to break some levels. If whether it's high volume or not, if it's just testing levels, there's a high probability it's not change of behavior. All right, and then also you want to look on red and then green on green, because selling does not happen without continuity. That's why you have red selling, then more selling, and that's red on red or green on green. So for example, here you had 17 selling, right? And all it did was come back to support. No worries. Here you had a break of 1, 2 lows coming all the way back here. Red on red and selling pressure, big problem. What happened? It breaks. Here you had green, but the green price volume, all it did was test resistance, and you had immediate selling. So that's what I'm trying to explain, that when you have price and volume and what looks like selling and buying, you got to think of purpose as well. And is it a change of behavior? Because when you're trying to identify if it's a change of behavior, or is it just the selling that or buying that's required for the pullback? It's not easy to take the market to a 50% retracement or a 68% retracement. It requires price and volume strength. All right, but you don't, as a white collar trader, you don't want to be fooled and say, "Oh yeah, that's a change of behavior." It's not. It's a pullback, and pullback require heavy price and volume. How do you distinguish? The one clue is whether it's just going back to support and resistance, and then going on a lower time frame to see if the buyers or sellers are coming in. In this case, you had that 32 heavy buying. All it did was test the breakdown. What happened? It got sold. What does that mean? Sellers came in on the pullback, on the bear pullback to test resistance. Sellers came in red on red. Here, on the other hand, you have big price and volume. It's not testing. It's breaking. 1, 2, 3, 4, 5. That's a different case. Anyway, so another break. Here you have the heavy price and volume, but you got to see what's it doing. It's testing this. So because, like I said, price and volume can come at any time, but what is the behavior? Is it a pullback? Is it a rally? Or is it a change of behavior? Change of behavior will have high price and volume. The rally can have high price and volume. The pullback can have high price and volume. All right? Because especially in the case of FA reward and all that. I'm not going to get into that. So you have to be able to distinguish. One key factor in being able to distinguish one thing from the other is the break of levels. Right? So and continuity, meaning selling on top of selling, meaning red on top of red, like red, or green. That's very important, because when the buying or selling happens, it's not, it has what is that called? Continuity. Sell. Like when you see it on a bar chart, you see red. That's why a lot of analysts, when they do this work, they're looking for selling not to be like red, green, but red. Right? That's why Weisswave, when he does the accumulation with a bunch of red bars, it's going to be a big wave. If it's red, green, it's going to be little waves. Red wave, green wave, red wave, little bars. So continuity of selling is very important. Anyway, don't want to get into that too much. Here, I'm bringing this up because here, today looks like a bearish day, right? But let me ask you, did it break any levels? I know folks are looking at, oh yeah, it's bearish. Where's the evidence of the breaks? Do you see a break? I don't see a break. I see the same low. So if this thing takes out this low here, the 40.75s, and goes down to 40.50, then we'll talk. All right? Because there's a difference between price volume that goes to support or resistance versus price volume that breaks. Anyway, so target is still in check, 4,400 and 4,375. Now I want to see if the buyer stepped in, and guess what? They did, right? So do they have enough strength to take it above the highs to start the next rally? That's what you want to be looking for, right? And look what they did. They took it down to support, and what do you think this is right here? Big green or big blue. There's the biggest price volume in 34 bricks right at support, buying. Rejection of the breakdown. And now you want to take a look at it a little bit more. Here's the actual accumulation. At that level, you have the biggest price wave in 49 waves. You have the biggest volume in 17 waves. No brainer, right? You have shorting of the thrust and boop, turn right there. So what do we learn from this? We say that, oh, number one, there's a level, right? Number two, left-hand side has indications, typically gets oversold or climactic behavior, which this has. Biggest volume, 49 waves, plus big volume. Climactic behavior, shortening of thrust, biggest up wave in 43 waves, which is your change of behavior. Nice little spring, tap, tap, boom, markup initiated. How much is it going to go? I don't know. But we can do the count. Now you bring the lower time frame or the lower box size of the point figure and you get the count. The count yields. I don't know what this is, 4,200, I think. Off of this base, it's 4,200. And lo and behold, was 4,200 test. So it's enough cause to go at least there. To go there. I wouldn't say at least, but it's enough cause here to go to 4,200. So it can go to 41.86, which is the test of the breakdown. That's the selling bar right there. Right there. So you have enough to go to 4,300, where we'll look for new cause and selling pressure and all that shit, right? So, and I want to make this point clear because it's very important to read the price volume correctly, because I'm also learning this from real experience and also trading, right? So this was the break. If you have high volumes, but they're not breaking anything, they're only testing, that's just a pullback, right? So where do you see the first actual break, like legit break? First of all, you see the climax right here, which is the biggest climax in 100 bars. And then you have this 27, which is quite large. That's your change of behavior right there. And the breakout, or this is also change of behavior, but it's more clearer here. Like once this happens, you know it's going to go. Y56 breaks this, breaks everything in the back. Now pull back to this, what do I call it? Space, tap, heavy volume. That's good. You have to get used to looking at price volume and levels, and then saying, oh shit, this is just a pullback or this is just a rally versus a change of behavior. These two are pullbacks, the 9 and 13. This 15. Why? It's not breaking. Here, it's sticking out like a sore thumb. Here, it's sticking out like a sore thumb. Why? Because it's breaking levels. All right, here, it's 45, but let me ask you this. Is it breaking or is it testing? It's testing, which means what? No worries. Here it goes down at 9. Is it breaking or is it testing? It's testing. Rallies have high volume. Pullbacks have high volume. And when I mean high volume, I mean relatively speaking, right? So how do you distinguish if the rally high volume or pullback high volume or what is it, the yellow one, the change of behavior. The only way you can do it is by putting all the pieces together and seeing one of the pieces is the break of levels, right? And of course the reaction. So the reaction and the follow through. So for example, the 9, and then what happened? It just holds, right? But if I had 9 and then it went lower, or there was red on red, what I call red on red, or green on green, then I have to use that for my interpretation. Like over here, you have 12 and 27, green on green, right? On this break, like here, I would say it's just, doesn't mean shit. Here, it's breaking levels. Here, it's the same thing. Here, not scared. Here, curious, not breaking it. Here, breakdown, but then it picks up. And here, I'm totally confused. Don't know what the hell's going on. Here, this is heavy selling, still weirded out, but I see something very important, the number. When you have something like this, I mean, the number is way too high. So there must be some selling, and look at the level. You can tell that there's selling off of this level, and this is not a test. It's a change of behavior. It's definitely not a pullback, right? Anyway, this I'd be confused. This is very clear. It's a breakout or breakdown. This test. This, I'm confused. It doesn't break, but with trend, it's telling me something. This is a pullback volume. Here it's climactic. If I see 100 at any time, I know it's climactic, or if like 80s or those very high numbers, it's typically climactic. Get ready for a change. Bang, green on green. Something's going on right here. And this is a clean breakout. You could also consider a change of behavior and all that shit. All right, so over here, boom, boom, that's a breakout. That's a pullback, even though the number seems high. All it does is test. Why? Until these lows are taken out. This is actually an oversold indication. It's actually oversold indication, or a pullback that gets oversold, and you can tell it's going to get picked up and probably take out the high. How do you know? The price volume will pick up on the upside and it'll give you the pullback. So I mean, I'm experimenting with the point figure intraday. I'm seeing it provide great value and clarity. So I don't see anyone doing this. I don't know why. It might be a technology thing, or it might be they think that it's only applicable for swing trading, but that is not the case at all. All right, the final thing I'm going to go over is the way I use it. One of the things that I use, okay, so over here you have a big wave, right? And then you see this is helping confirm the big wave, but there's one final piece. You have price volume of a particular market, but the indexes have an extra edge because you have other stocks that help you verify. You also have market breadth. So that one thing about index futures is that their market breadth is additional data point. And what I want to see is a lot of stocks participate. Meaning when you have a change of behavior, let me just be very clear, and you don't know whether if it's a change of behavior or not, if it's a rally, high volume, whatever, you don't have no clue. What is the confirmation? And this you're not going to hear online anywhere, but I'll tell you what it is. How do you know? How did I know that this is a change of behavior here versus, where the hell am I? Up here, the green is not a change of behavior. Obviously, it's just a test, right? But is there a second confirmation? I mean, how do I know that this is a change of behavior? Or this is a change of behavior? Why not the other greens, right? Here's the thing. With indexes, you can do this, but you cannot do this with other markets. At least there is one other way to do it, but I'm not going to get into that. But with indexes, there's a one special way to do it. Remember, indexes are the result of their components. This is how you use market breadth, meaning how you tell a change of behavior. You might have learned online or whatever these guys are doing. Oh yeah, climax, secondary test, blah blah blah, right? This is what you learn. And but how the thing with the change of behavior for index is you have an additional data point which helps you verify whether it is a change of behavior or not, and that is the participation of that market's components. If the S&P has a change of behavior, you damn well, whether it's intraday or not, are going to have its components participating. If on your chart you just have price and volume move from S&P, that is manipulation or whatever, chances are it's manipulated by a couple of stocks or big stocks, but it cannot be manipulated by entire market. So one of the criteria for a change of behavior for indexes is whether its components are participating. If you got 500 stocks, you're going to have a certain number at least, and you can go through the various thresholds, but it will be clear that they're participating. How do you do this? Now you're going to see how you distinguish a change of behavior. This is one way to do it. When this market has the 12 and the 27, one key thing that I noticed was that the number of stocks that are participating on this wave is the biggest since the open. Biggest in the last 12 waves. Biggest since the last 12 waves. So yes, there was a climax. Yes, the automatic rally is the change of behavior. And yes, as they were down, they got bought. That's your potential change of behavior, which is validated by market breadth, which is validated by participation. 114 is bigger when comparing it with the up waves. Remember, you're comparing up waves with up waves first. 114 bigger than 20, 55, 57, 46, 76, 52, 39. What is this? 43, 37, blah, 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 blah. All of these waves, this is the biggest. So when you have a change of behavior here, in my book, or my opinion, the components must validate it, meaning market breadth needs to validate it. It cannot just be price and volume by itself of a particular market like the S&P or the whatever, because in my opinion, how the hell is the index moving when its components are not? If your index is going, your components have to support it. The components of an index have to support it. Otherwise, it's highly likely it's manipulation. Right? How the futures or whatever going and the stocks are not. So the logic is that since any index is a function of its components, its price is a function of its components, literally and mathematically, because it's built off of the prices, right? The components must move when the index moves. So there you go. That's how you do it. And there's the components, meaning the manipulation of a couple of stocks, can be identified because not enough components are moving. Right? So the change of behavior on the S&P means that a large number of components must also move with it, validating the change of behavior of the S&P. And if it's a small number of components, then there's something wrong. And this was how I validated this as the change of behavior. Okay, so this can be done for indexes, right? This is the edge in indexes versus other markets, is the fact that the index is based on the components and they verify each other. What I forgot what he called it, inductive or deductive thinking or something like that. But when Wyckoff talked about it, I don't want to get into too much of this, but he called it inductive and deductive, like top down and up, top down and bottom up. So top down was that the change in the index is verified by its components. Bottom up is change in components is verified by the pressure in the index. Top down, bottom up is inductive and deductive. All right, so but obviously, like, I don't want to go through all of those stocks and see if they're moving. So what can you do is you use a market statistic that tells you the number of stocks that are going up and down, so you don't have to go check Apple and Amazon and Facebook. And you can do that, but I'd rather just get a number. 114 stocks, biggest in last 12 waves. Good enough for me. All right, folks, hope you learned something, and take care. Bye.